right, thank you all for tuning in to WGHC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including tax preparation, financial coaching, credit repair, small business consulting, lending, all that good stuff. We pretty much provide all the key financial services you need in order to keep your financial wheelhouse. So thank you all for tuning in to WGHC 98.3 FM, your voice and music, your station. This is the show Money Talks, where all we talk is money and nothing else. Today we'll be talking about how to buy or acquire investment properties during COVID-19. So we'll be talking specifically how to acquire investment properties. Typically we talk about how to acquire investment properties basically outside of traditional financing, but today we'll make it special and we'll talk about COVID-19 essentially. But before then, we would like to kick it off with a market report. And this report is as of May 15, 2020. And shout out to those who are listening live on the radio. We're on 98.3 FM in Chicago. You can tune in to your radio right now on 98.3 FM. We're also live on Facebook and we're live on Instagram. So if you have any questions or anything like that, please feel free to type it into the chat box or into the message feature on Facebook, Instagram, and then you can call into the studio. The number is 773-942-7167. 773-942-7167. Be more than happy to answer any questions or any comments you have. So this report is as of May 15, 2020, last Friday. Let's see what happened. Stocks opened the week with mixed returns. The S&P 500 stayed level. The Dow fell by almost half of a point. And the NASDAQ finished the day up 0.75%. So that's what happened when the week started, essentially on Monday. Crude oil prices dropped by nearly 1%. Positive news came from New York last Monday as Governor Cuomo indicated some businesses would be able to reopen on a regional basis, as the state reported the lowest number of COVID-19 related deaths since March. So that means it's good news in New York, in the state of New York right now, that the COVID-19 numbers have actually gone down, where they've seen the lowest numbers since March. And so they decided to basically allow some businesses to reopen, meaning they're making progress. What that means is that's good news for investors, good news for real estate, good news for just everything in general. I mean, this COVID-19 thing is very, very disruptive. It's extremely disruptive. It's causing a lot of chaos, a lot of business downfall, and a lot of people going unemployed. So it's causing more bad than it is good, but it is creating some good in that it's creating opportunities to take advantage in places where we would have otherwise not been able to take advantage. And somebody has a question on Instagram. It says, is the reopening really a good thing? I mean, from a health standpoint, that's very debatable. From a health standpoint, I don't think it's good because then you're exposing more people to the COVID. But from a financial standpoint, you have to reopen at a certain point. You can't just stay closed forever or closed for a long period of time, because what happens is that when the economy tanks that bad, now you don't have a health pandemic. Now you have a financial pandemic, meaning people won't be able to feed their families. People won't be able to they might actually die financially, meaning they might literally die because they don't have money to pay for anything. So when that happens, you have to find a balance. And so the skill set of the government here is that they need to find a balance in reopening versus basically being shut down. You can't be shut down for a long period of time because the economy relies heavily on the day-to-day activities of people. And then also you risk things like crime getting higher. I mean, People going out to kill each other because now they're going insane pretty much. They're not stable mentally. They're definitely not stable financially because people are getting laid off left and right. 36 million people filed for unemployment, at least initial unemployment, over the past 8 weeks or so. So you do risk a financial pandemic, which we don't want either. Although I do think that the state's reopening is not the best of ideas right now. I think we need to wait it just a little bit, maybe 1 week or two. But literally every single minute that we stay closed, a business is shutting down or somebody is going through a financial depression right now. That can be as dangerous as the medical pandemic, believe it or not. So we do have to find a balance. We can't just think about this from a health standpoint. We have to think about this holistically, from a sanity standpoint, from a financial standpoint, just from a social standpoint. I mean, now people literally have to relearn certain things, like how to shake people's hands. Certain things will feel so weird when we all, quote unquote, come back, when the clean air is back out again. So we have to make sure that we find a balance, and that I'm not a health expert by any chance. But I do believe, I've done extensive research on COVID-19, that if you open, you can reopen, you just have to do it smart, and that everybody has to wear a mask. Don't shake hands. Practice social distancing. Wash your hands after you come in the house. Take a shower. Do whatever you have to do. So these are the things that some people still aren't doing for some reason. That's the only way we can reopen successfully, is if everybody is taking the safety measures necessary. So to be honest, if we keep reopening, the numbers keep going like this, COVID-19 might be here for a very long time. Some people think, oh yeah, this will be here for a few months. This might be here for a few years. Who knows? Nobody knows right now. Nobody knows the future. That's the thing. Nobody really knows what's going to happen. No doctor really knows what's about to happen. No lawyer, no accountant, no president, no vice president, no governor. Nobody knows what's in store for the future. But one thing we do know is that there's opportunities, right? That's the main purpose of today's presentation, in that there are opportunities to thrive. And we do have some additional questions. Sorry, Facebook for some reason, or Instagram, goes a little sideways. So I'm about to go off camera on Instagram and just read the question sideways. So let's see. Somebody said, blanket opening is not advisable because density is very important. Yeah, I believe so. That's true. And then follow-up comment says, given a chance to advise us small businesses or small business owners based in Africa, how can small business owners bounce back, considering that we have been closed for months now? Any new insights? Ultimately, you have to take advantage of the programs if possible. If you qualify, make sure you're applying for these loans, PPP, Paycheck Protection Program. There's a lot of grants, relief grants, that are being offered right now. You just have to do the research and find them. Like Chicago has a Small Business Resilience Fund. If you are literally based in Africa or in an African country, then you really, I don't know too much about that, but you do have to do research locally and see what programs are available. I know if you're a U.S. citizen, you can certainly apply for these government grants and these business loans, stimulus checks. So right now, look out for the stimulus. But actually, the big point is find a way for your business to get reopened, if possible. Meaning, maybe you were just doing all brick and mortar. Well, find a way to go online, if possible. All right, find a way to do your meetings virtually. Find a way to do your consulting virtually. Find a way to sell your products online. Whatever it is you do, there is some small component that can always be converted online, if possible. For example, in my industry, we're known for being brick and mortar. Everybody coming into the office, we shake hands, we do your taxes, and then you go on about your day. Nowadays, the Badu Tax Services, we're 100% remote, meaning that we do everything virtually. All right, clients send us documents to our secure portal. They send us communication via email. We filed a tax return for them, and it's pretty much business from there. So, in a way, one of the ways to thrive, this is my recommendation, is to find the way to adapt your business plan to the current environment. So if you're brick and mortar, try to find a way to go virtual, right? COVID-19, I was having a conversation today with somebody. It is forcing us to go virtual if we can. If we cannot, for whatever reason, right? I can tell you a lot of businesses that can go virtual right now. But for whatever reason, if you cannot find the technology, or if you're not able to go virtual, then you ultimately have to apply for some of these programs such as stimulus and SBA and all. I mean, you should be doing both, if anything, right? There's so many loans out there right now, and they're thinking about a $3 trillion stimulus that we'll talk about in a second. It came up in the report this week, but a $3 trillion stimulus that can impact things such as stimulus, basically stimulus checks for families, $1,200 per person. You also have student loan forgiveness for those who are going through rough times, so up to $10,000 in student loans being forgiven. I mean, I'm very excited for that one just because I work with a lot of millennials, and that's an opportunity to help millennials. But essentially, you really do have to just be on the lookout, right? First and foremost, adapt your business model to this new environment that we're in, because it might be here for a long time. Right? It will take time for us to get back to the new normal. As a matter of fact, there won't be a normal anymore. Normal is not existent anymore. Nobody knows what normal means. Does normal mean that we do virtual meetings? Or does normal mean we go out and shake hands with each other again? Nobody knows. I mean, nobody is to define what normal actually means. To me, normal means that things are going in a stable environment. The world is changing. We have augmented reality, AI, artificial intelligence. We have the cloud. We have Facebook live stream. We have so much at our fingertips right now that if our business model was one that mirrored something of old school or old fashioned, we have to change it. We cannot survive financially if we don't change that model. So my advice, number one, if you can go virtual, go virtual. Find ways to go virtual. Maybe it's just 10%, 20%. It gets gradual over time. When I started my business, I was 70% virtual. And now I'm 100% virtual, meaning I don't meet with clients anymore, like in person. It's all Zoom. It's all phone call. It's all conference. I mean, and it still achieves the same purpose. We still get the taxes done. We get it done way more efficiently. And I would argue that we get it done more effectively because now there's more transparency in the communication and everything else that we do. So hopefully that answered that question. I'm sure there'll be more down the road. But back to the report here. The major indexes tumbled last Tuesday, halting a multi-day win streak for the NASDAQ. The Dow lost over 450 points, or 1.89%, its largest one-day percentage drop since May 1st. Both the S&P 500 and the NASDAQ fell more than 2%. Grim news on the COVID-19 front seems to have driven the market. Several countries that had begun to erase restrictions saw a spike, which makes sense, I think, to somebody's point, to a spike in new virus cases being reported. Basically, when they reopened or when they reduced some of the restrictions, you saw a spike in the COVID-19 cases, which is basically what happened when we had things like the Spanish flu and the flu that came out a few years ago. All these different diseases that came out, you sort of saw the same trend, in that there was a shutdown and then they restricted, and then you see a spike, and then somehow, some way, the numbers went right back down, and then things got back to normal, whatever normal means, or whatever normal will mean in the future. And that's the thing, we can't rely on the word normal nowadays. Like, the world is changing, the world is adapting. There's so many new things. Things are changing every day. Right? Nowadays, ride sharing, the way that we order a taxi is different now. The way that we order food is not the same as back in the day where we would go to a restaurant. So many things have changed. A lot of things have changed from what they were. But essentially, Wuhan, the Chinese city that reported the first cases. So, of course, COVID-19 is said to be originated in China. So, Wuhan, the city, the prime city that reported the first cases of COVID-19, had people test positive for the first time in more than a month. So, get this, the country that actually started COVID-19, or in a way is blamed or is targeted to have begun the COVID-19 pandemic, reported its first case in over a month. Now, to me, that sounds a little skeptical, right? That is very, very shocking. And that the place where it was essentially, because when something is created somewhere or where something originates, that's where it's created. Wherever you were born is where you're from. So COVID-19, we know, was born or was given birth to in China, Wuhan. The place that started it now has the first case in over a month. Right? So that to me sounds a little fishy. It sounds a little political, a little skeptical. In that there's some sort of political agenda going on here with this COVID-19 thing. Something is fishy. Something is up. I don't know exactly what it is, but the fact that the place that it originated had people test positive for the first time in more than a month, that says something, right? These other countries can't seem to figure out what's going on. Illinois is in the thousands every day. I mean, it's crazy. And then you have a nation that started it, essentially, report the first case or the first positive case in over a month. That's interesting. But finally, Dr. Anthony Fauci, head of the U.S. National Institute of Allergy and Infectious Diseases, in testimony before the Senate, warned that reopening the nation too soon and without caution and expanded testing could lead to needless suffering and death. I mean, it makes sense, right? If you reopen too soon, people go out, go to the beaches, have spring break, do whatever. Yeah, people will die. Or people will catch the disease or the virus and possibly lead to death. Now, thankfully, we figured out some remedies, some homemade remedies. We figured out more testing. But it's certainly not enough. This is only the beginning, and hopefully the end is near. But to be honest, the way that it's looking, the way that the cases are going up, it might not be a while until we reopen. We get back to quote-unquote normal. So in my opinion, right, I'm not a doctor. I'm not in a medical profession. I don't know anything about COVID-19. But in my opinion, common sense would tell me that stay closed just a little bit more. Just a little bit, right? Maybe a week. Try to get this thing calmed down a little bit more. Try to figure out something. Go back to the drawing table. And then possibly do a gradual reopening where we reopen in phases, which I know Illinois or Chicago at least is planning to do. So right now, nobody knows, right? We can only use information that's available to us. I'm a firm believer in God, and control what you can, pray over the things you cannot control. So for me, I'm controlling the amount of real estate that I'm buying right now. I'm controlling the fact that my company can go virtual 100% and not meeting with clients and risking both of us exposing ourselves to COVID-19. We're practicing social distancing fully, 100%, meaning there's no face-to-face, direct in-person contact anymore. We're fully virtual. We're getting business done. Our revenue numbers are higher than they've ever been in the history of the company, and we're prospering. Right? That's what I can control. I can't control when COVID-19 is going to stop. Absolutely not. I have zero control over that. The president doesn't even have control over that. I mean, no priest, no pastor, no fetish priest. Nobody has control over this COVID-19 thing. So we do have to be careful in worrying about the wrong things and worry about the right things and controlling the things we can't do. Nobody knows when a concert is about to happen, when a wedding. Nobody knows. But as people who have evolved over time, we just have to figure out how to continue with what we have. That's all we can do. So continue with the report. Stocks were sent reeling last Wednesday following the Federal Reserve Chair Jerome Powell or Jerome Powell's warning against the likelihood of a rapid economic recovery. So basically, he doesn't think the economy will recover as fast as we think we will. Powell also suggested that Congress enact further economic stimulus, right? So more stimulus is needed to ease the risk of long-lasting economic damage as the country tries to recover from the pandemic. Each of the benchmark indexes essentially plunged deeper into the red by the end of the day's trading because of the Federal Reserve Chairman Jerome Powell came out and said, hey, this thing is more serious than we think. The stock market fell, right? This is the theory of investors. They're so panicky. They're so reactive. They're so shooken up when it comes to news like this. And to some extent, I don't blame them, but to the most part, I think it's just some of it in a way is lack of common sense. But the Russell 2000 dropped 3.3% as the Dow slid close to 2.2%. The NASDAQ, which had surpassed its year-end value following a series of daily gains, fell back into negative territory for the year. Thursday saw nearly 3 million people, 2.98 million to be exact. 3 million people, 3 million new claims for unemployment insurance, bringing a total of those receiving unemployment insurance benefits to almost 23 million people. Despite the report, and by the way, 36 million have filed for unemployment, but only 23 million have actually received money, meaning 13 million people right now don't have unemployment benefits. That's very scary in itself. But despite that report, investors' return to the market pushed the major indexes higher. The Dow gained over 377 points, or 1.63%, and the S&P 500 pushed ahead by 1.15%. The NASDAQ rose nearly 1%. Stocks of some major banks surged Thursday, driving the large cap benchmarks. Now let's talk about Friday. Stocks closed Friday higher, but not enough to recover from midweek losses, ultimately ending last week's trading on the downside. Last Friday saw the full of conflicting information for investors to digest. Retail sales posted historic losses. The trade war with China was rekindled, so basically it was reactivated. And to be honest, not to say anything bad, but I believe COVID-19 started because of the war, basically, between China and the U.S. right now. Last year, as you all may know, there were some battles trade wars between China and the U.S. So I believe that this whole thing started due to that, right? Our president running his mouth. And essentially somebody got angry and decided, hey, let's start this global pandemic, right? See what happens. I think that's what happened, right? That's what my instincts are telling me happened with this whole COVID-19. It was all a plot, right? To basically damage the economies and ultimately see if and when we can recover. Now, of course, karma is known to bite back. So we'll see what happens when it comes to that one. And by the way, I am not a politician or anything. I'm just simply giving opinions on what I think happened, right? Because right now, nobody seems to figure out what's going on in the world. But essentially, the House of Representatives was set to vote on an additional $3 trillion COVID-19 relief package, which was passed by the House, right? Just the House, not the Senate. By the close of trading last Friday, each of the benchmark indexes lost value, led by the small cap Russell 2000, which dropped nearly 5.5%. The global Dow fell by more than 3.3%, followed by the large caps of the Dow and the S&P 500. The NASDAQ ended the week down a little more than 1%, but not enough to pull it below its year-end value. The major indexes remain well below their 2019 closing marks, however. The price of crude oil went up from $24.81 to $29.71. So if you've seen your gas prices go up lately, that's why. From what I've heard, basically, people are scared to are scared to take public transportation. So it's forcing more and more people to drive, which is good for the auto industry because that means they can sell more cars, basically, right? It's all common sense. Oil prices are pushing up because there's a more demand for cars, basically, or more demand for driving. The price of COMEX gold went up from 1708 to 1752.50. So that's where we're at with that. And now talking about the week ahead, this week begins the focus on the housing sector with the release of the latest information on new home construction and existing home sales. March saw sales of existing homes drop by over 8%, essentially. So basically, we're about to see housing numbers come up pretty soon. So March saw sales of existing homes drop by over 8%, right? So the data for April is coming out. So basically, that's what we're dealing with, and that's what's coming up ultimately with this whole report and with this whole thing. So it's not looking too good, but remember, all hope is not lost, nor should it be lost. There's still hope, right? Take advantage of what you can, control what you can, and pray over what you can't. That's basically what's going on today. And we have a comment. Let's see. Yep, that's the root cause. Absolutely. Let's see what's going on Facebook. Let's see. So let me just move up a little bit here. Let me just see the question. Question is, what is your take on reopening, given the statistic that 90% of deaths occurred to those with pre-existing conditions of the elderly? Should we all take the financial blow or just put restrictions in place for those who are at high risk? It's tough. I mean, to be honest, I don't know what to say, but it's tough. I think government jobs are very, very hard right now. But ultimately, safety first, right? Use common sense in that. Safety first. We should protect our people first and foremost by not reopening too soon, establishing protocols such as the whole mask, and I think gloves need to be required when you go places. Gloves are not required right now, but I think gloves need to be required as well, because I mean that's pretty much exposing you to the risk as well. I mean, why should we have to wear masks when we don't have to wear gloves, when everything we touch can potentially expose us to the COVID-19? Remember, I'm not a doctor. I'm not a medical professional. I'm a financial professional. I can only speak on the finance side of COVID-19 and share the little information that I do know about the health side of COVID-19. But ultimately, I think safety first, and more stimulus needs to be released for people. But anybody who's listening right now, let's get into investing, right? How do you boost your income in a time like COVID-19? And stop worrying about stimulus and all these government programs. And not to say that we should not apply for them when they come out. We should be the first in line to take advantage of all these government programs, right? Stimulus check, PPP, EIDL when it came out. I mean, everybody listening right now should have been the first people to jump on those applications. And then the money ran out. They released some more. Luckily, the money hasn't run out yet because they have put some restrictions for the larger companies. But time is ticking, right? Time is money. Time is money every single day. So one way to combat this whole financial meltdown is, let's talk about investing, right? Alternative income sources. How to boost your income and not worry about expenses. How do we put more money in our pockets during a time like COVID-19? And I'll tell you right now, I am extremely excited. Extremely excited about the real estate industry. Unfortunately, a lot of people will lose their homes over the next few months. A lot of people are losing their jobs. But this is creating opportunities for investors like you and I. And remember, nobody's taking advantage of anybody, right? It's just how the circumstances and how the cards are being played and dealt with right now. And that as real estate, we have to think about it that we are first and foremost helping people. Right? We are helping people get out of loans that they cannot afford, because if the bank takes the home, well, guess what? That's a foreclosure on a credit report, or possibly a bankruptcy that can lead to it being on report for 7 years. So as an investor like myself, how about I step in and I prevent that foreclosure or that bankruptcy, save this person's credit, and possibly put them in a new home that they can afford and that works best for their financial picture. Because a lot of people's financial pictures have changed. So one thing when we talk here, we're not taking advantage of anybody. We're simply creating opportunities for ourselves and we're helping others. If you're in real estate just to make money, you won't be successful. Real estate is a people's business. Real estate is a helping business. It's not just, oh, I'm making money and that's it. It's about helping people. So now is a time where we can help a lot of people. Real estate is a very, 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 very hot industry right now. So let's talk about how do you buy real estate outside of the traditional FHA loan, conventional 20% down payment and all that. Let's talk about how to buy real estate during COVID-19. Now, I will be the first to say it has gotten tight with the lending. Lenders have tightened their restrictions. There's a lot more restrictions being placed on borrowers, but it has not closed the door on real estate. Real estate will never be a door that's closed. We can always buy real estate, no matter what. So most people think you need a lot of money to get started in real estate. That's a complete myth. You don't. You should, right? You should have money before you get started in real estate, but you don't necessarily have to. So some people think that you have to get involved with a bank, which is false. It's a myth. You don't have to get involved with a bank to buy real estate. I can tell you right now, out of all the investment properties we've bought, over 50% of them were bought outside of a traditional bank. I'm happy to say that all of these things that you're hearing about real estate can be a myth, or they are a myth. Banks will come in handy, and I love banks, right? Banks give me money, so I love them. But that's not the only way. It's not the end-all, be-all. Now, let's talk about one way you can buy real estate, and it has gotten tight on this end. By the way, if you're flipping properties right now, you want to be extremely careful. Extremely careful. Because you might land into a fire that you can't put out. And that home values are getting low. And ultimately, we have to be careful. Because when we buy the real estate, we have to predict how much we can sell it for. And when home prices are going down unpredictably, right, at this rate, with COVID-19 and all this other stuff going on, we don't know what the price will be when we sell it. So you have to be very careful. You have to be very, very conservative in your estimates. I would probably knock down the ARV to after repair value probably by 10% nowadays, right? Because we just don't know what's about to happen. Luckily, we will recover from this. And always have exit strategies. Before you get into a property, you should know how you will exit. Right? Before you buy a building, you should know how you plan to get out of the building. And you should have at least two ways of getting out. Either you sell it, refinance, or you hold it basically by using private loans or whatever you decide to do. Let me just quickly get to a question. It says, let's see, I'm a pattern day trader. Can I hire you? Can I hire your services? I am not a day trader. Right? I don't day trade at all. I'm somebody who believes in long-term investing. I'm not a guy who likes to flip things. I'm a guy who likes to buy a good investment at a great price and hold it for a very long period of time. So I wouldn't be the best person to do any day trading with. But if you are somebody who's interested in long-term investing that can produce you income for the rest of your life, then we can certainly talk. I can share my insights, but I am not a day trader. I am only a long-term investor. And we have Alexis, he said, love that you're giving the wisdom. Absolutely appreciate that, Alexis. But so one way to buy real estate is through hard money lenders. A hard money lender is basically a lender that is, they call them asset-based lenders. Meaning they don't care about your credit or what you've been through in life. They do care about your experience, by the way. But basically, they will give you money as long as the deal is good. Right? As long as the numbers work out, then they'll give you the money. Now, let me just attempt to do some math. Let's say you buy a building for $100,000, right? Or the building costs, or let's just say this. The building costs $80,000. Right? It costs you $20,000 to repair it, and you can sell this building at based off the after repair value. After repair value is determined by the comparables in the area based on square footage, similar square footage, bedroom, bath, finishes, all that good stuff. Let's say you can sell this building for $150,000. So that's about a $50,000 profit. That's a pretty sweet deal. You can go to a hard money lender and they could potentially give you, right now you're seeing about you're seeing about 65. The maximum you can get right now is about 70% LTV. They call it loan to value, based off the ARV, or the after repair value. So whatever 70% of $150,000 is, you can essentially get a loan for that amount that would cover your purchase and the rehab. Right? So your purchase is 80, your rehab is 20. You can get a loan for 70% of $150,000, and that allows you to essentially buy this building and cover both the purchase and the rehab. Now, right now, lenders require you to have reserves. They require you to have a significant amount of reserves. They need at least 3 months of the interest payments in reserves. They need, some people say they need 3 months of the mortgage, potential mortgage payments in reserves. Reserves are simply cash you have in a bank. So if you don't have money to start with right now, it's going to be extremely hard to flip. But remember, you have to have an exit strategy. The nice thing with the exit strategy here is you can refinance that building that you bought it for 100. I'm sorry, you bought it for 80, rehabbed it for 20, so you're all in 100. You can refinance it, and now instead of 70% of 150,000, you can get 80% LTV. I know lenders that are lending still at 80%, although not likely, or not a whole lot of lenders are still doing 80% loan to value, meaning if the loan is 100,000. If the value of the property is 100,000, they'll loan up to $80,000 on the property. So my example, they would loan about 80,000 on the on the 150. So effectively, you can cash out. You can do a cash out refinance and basically collect 10%. So you would have $15,000 in your bank account, right, after it's all said and done. And you can turn this property into a rental property. This is called the BRRRR method that we went over last time. The BRRRR method is you buy a property at, let's say, the 80,000. You rehab it. That's the first R in the BRRRR. You rehab it for 20. Now you're all in 100, and then you you refinance. You rent the property. So you basically find a tenant to rent the property. Some banks require a seasoning of about a month, 1 month to, they can do all the way up to about 6 months. It's not all that good if you're using this strategy. But let's just say they do a 1 month seasoning on the rent. I do know a lender who does that. Basically, you have to have a tenant in there for at least a month. Then you refinance the loan into a traditional mortgage with the 80% LTV, 80% loan to value, or it's quote-unquote 20% down payment, although you don't have to put any money down because it's lending based on the value. So in this scenario, you would have $15,000 cash out, right? Cash out refinance, less any closing costs, fees, and anything like that. Always remember to put that in your calculations. But now you have a rental property that you bought with basically no money down, right? And that's a sweet deal. A lot of these deals will be coming up in the future. You can get properties via short sale. You can get them via bank, a foreclosure. You can get them maybe just somebody who's looking to sell, get out of real estate. All right, we're working on a deal right now, which actually we'll talk about seller financing in a second. But basically, you can get a hard money lender that can fund the acquisition and the rehab that allows you to do a cash out refinance. You do have to be careful. Remember, find your exit before you enter. So you have to find the refinance bank first. Explain to them your strategy, what you plan to do. That, hey, I have this property on the south side of Chicago. I'm about to buy it for 80. I plan to put in 20, right? I have a hard money guy that's going to fund me the 70% of the 150. And then I'll come to you once I'm done with the rehab and put a tenant in there for a month. I'm going to come to you And please let me know what sort of LTVs you're offering right now. It is risky because banks can say, well, we're shutting down all of our loans right now. Just like some banks, some hard money lenders have completely gotten out of real estate, basically. Or they're not lending to anybody right now. So essentially, this is a way that we can either flip the property, which I don't recommend, especially in this time, or we would sell the property for the 150, hopefully if all goes well, or we refinance the property so that we can take out some cash out refinance, essentially. And this is how you can build wealth over time. I think this is still a great lucrative strategy. You have to be real careful with the numbers, be very conservative, right? Negotiate. Tell the seller, hey, due to COVID-19, I think your property is worth $10,000 less than it is, so I can only offer you. Right now, it's about to turn into a buyer's market, so you will have leverage on the negotiation, right? We're doing a deal right now where we have it under contract, or it was listed at 85, and we offered 80, but we went back to the numbers because our lender said they're only lending up to 70% when we thought they would be lending 85% when this whole COVID thing started. So we have to go back to the seller and say, will you give it to us for 70? And they'll probably say, yes, I'll give it to you for 70 because you're a good buyer. For one, you can get qualified for this loan pretty easily. You have experience, and I need the cash right now. Remember, you're not taking advantage of anybody. You're simply saying, due to these circumstances, here's what I can offer. You'll still get your cash, right? I might even throw in some money on the back end when I close the deal, just to keep you happy a little bit. But you do have to be creative right now. You have to be very creative in real estate. You can still do remember, we talked last time about traditional, FHA, conventional, VA, all that good stuff. You can still do those loans, right? Nothing wrong with that. Right now, we're talking those who may be on their second property. Remember, your first property should be FHA or conventional, where you do either 3.5% or 5% down payment on up to a 4-unit. But your second property, or maybe if you're having a hard time getting qualified for a mortgage due to your credit score, then you have to go to these other more non-traditional finance methods. We have a question on Instagram. Yeah, it's so weird on Instagram. The question is here, Jeff, I meant to ask a pattern day trader, should I want to invest some of my profits in long-term investments? Do you provide service? Yes, I do provide that sort of advice. And yes, you should be reinvesting your short-term profits into long-term cash flowing or cash producing assets, such as real estate. So that's a hard money lender. The downfall is that they do require high interest rate. I mean, you're talking 10 is very low, actually. 12 to 18% interest. Remember, it's a short-term loan. It's nothing that you'll have for hopefully not a year. I've been in a hard money loan for about a year. Very, very painful. But this is something that's 3 to 6 months typically, right? So you're in, and then you get out quickly. You refinance it, you exit from the deal, or you exit from that loan, and you refinance it into another loan. So that's one of the downfalls of a hard money lender. They have very, very harsh terms, but they can close in as quickly as 7 to 10 business days. Very quick closing. You start your rehab. Make sure you have a good contractor on your team. Very critical part of your team. And your attorney to make sure this property is in good, sound, quality, legal condition. Similar to hard money, you have private money. So private money lender. It can be a private institution. It can be a rich uncle. Whoever it is that you can find. Basically, it's the same concept with the hard money. But now they're giving you more favorable terms. They're not as harsh. Basically they have more relaxed terms. They're like your let's say your non-bank or your non-person that's giving you a hard time with documents and all that. Good thing with hard money, they don't require a lot of documentation. Very easy documents. Quick check in a box. They don't even look at tax returns or anything like that. Very easy loan to get, but trust me, it has gotten more strict. It has gotten tighter in the lending industry right now. I know it because I'm experiencing this right now. I'm experiencing trouble getting through a 10-unit acquisition right now, and I'm experiencing issues getting through a 3-unit hard money loan right now. So I'm going through it. So now I have to get creative. I have to put my creative hat on and start getting creative with the financing. Maybe we couple 2 loans together. Maybe we do 70% LTV, but we couple it with a short-term loan that covers about 10 to 15%. They do what's called a seller carryback loan. So that's more on the private money side. Now here's the one that you will see if you know how to master this. Right? If you can master this next strategy that I'm about to tell you, you will dominate in real estate. This is how we plan to buy our next 3 properties. We've already identified 3 deals that we will be buying over the next 3 months. One of them is fully cash flowing, no work needed property that we can get for as little as a $5,000 to $10,000 down payment. Right? And then there's another deal where we can get it at 10% down. So remember, these hard money guys are doing 70% LTV, meaning you have to come out of pocket 30%, possibly 30% down payment. Well, these next guys can do it for 10% or possibly lower. So remember the myth about needing a bank? Well, it couldn't apply more even here. Believe it or not, the seller himself or herself can become the bank, in that the seller can become a financial institution where the seller can finance the deal. This is called seller financing. Basically, instead of going to a JP Morgan or your traditional or your typical mortgage company, you can say, hey, seller, COVID-19 is here. Nobody wants to give me a loan that's at good terms or favorable terms. And I know you don't, I understand you might not need the money right now, or you may need the money, but you're flexible with the terms. So would you be willing to give me a loan, right, right now we're doing a deal. Literally, we're doing a deal. It's about $100,000. It's a 3-unit building that's on the south side of Chicago. Remember, we only invest in distressed areas, such as the south side. But all they're offering, or all they need, is a 10% down payment. Very, very little documentation. A personal financial statement, real simple, listing your assets. They don't need tax returns at all. They don't need really anything. Personal financial statement, all you need is a 600 or above credit score. Some people don't even require one. It doesn't go on your credit report either. So it's a non-recorded sort of loan. Seller financing turns it into basically a land contract, meaning that you own the rights to the property, but essentially it does not go on your credit report. So it doesn't go on the quote-unquote public records that you still own the building, basically. Technically own the building because you have ownership rights. But you can get this building, rehab the building. We bought a building like this in Dalton 2 years ago. You can get the building, rehab the building, and rent it out to a tenant. We're collecting $1,500 a month now on that building that we bought in Dalton. Seller financing. We bought the deal for $42,000 with a $7,000 down payment. So it was a very sweet deal. We rehabbed it. We spent about $20. It was a little higher than we wanted. We spent about $20, but it's cash flowing $1,500 a month. So ultimately, seller financing, you'll see it pop up a lot, right? If you have a real estate agent, ask them, seller financing, what can we do? You'll still make, as real estate agents, you'll still make your commission, right? Because you sold the property. Attorneys will still make their money. But basically, you're getting a loan from the owner himself or herself as opposed to a bank. Very easy terms. Very, very easy. Lean, soft. No hassle, no 30-page tax returns. And I just went through a traditional mortgage. The reason why I have so much sentiment in that, so many documents. So many documents. But when you're going through this non-traditional seller financing, soft. All I had to submit was a 2-page application to the lender. They had a private person that was like going through the documents and everything. Stated income, so that means they don't verify anything. You just say, hey, I make this amount. You want to establish a relationship with the lender. This is a great way to buy an investment property using seller financing. It is awesome. It is very, 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 very awesome. And then, or this is also called a seller carryback. So a seller carryback is basically the same thing. although with the seller carryback, you can mix it up with a loan, maybe from a private bank. So let's say the banks are doing 70% LTV. Well, now, for example, on a 10-unit acquisition that we're doing right now, the lender is allowing a 10% seller carryback, meaning the seller can do a loan on up to 10% of the purchase price of the property, and I have to come to the table with 20% down payment. I already have a 6% closing credit, so effectively, I'm only coming out of pocket about 15, give or take, about 14 to 15% on a down payment, which is pretty sweet. That's a 10-unit building. It makes about $90,000 a year. Expenses on the building are about $30,000. So all in all, you make about $60,000 in profit every year. So those are good terms. Now, the downside is that the interest rate is pretty high on these types of loans because it's risky. I mean, it's riskier. It's not like a traditional bank. There's typically no mortgage insurance or anything like that to cover the lender or the owner in case you go out. So it is risky, but they do have first or second position on the mortgage, meaning if you default, they have the right to foreclose on the property and take the property right back, which is pretty sweet on the seller side. Now let's talk about another one. Is subject to. We're working on another deal right now, so I always like to use practical ways of real estate. So we have two more to cover. I know we are running on time. Hopefully you guys have enjoyed this so far. But we have subject to. Basically, you're buying a property subject to an existing mortgage. So let's say that a seller has a property that is worth $200, right? They have a property worth $200, and they have an existing loan on it for $150, and you can take it subject to the mortgage, and so they have $50,000 in equity, and all they need in exchange, a $10,000 down payment. So remember the notion when I told you guys, what if I told you that I can take $1, I can ask you for $1, you give me $1, and I can give you $5 back, right? Would you do that deal? Yes or no? I think you probably would. This is exactly what it is here with subject to. You're buying a property subject to an existing mortgage. The seller has $50,000 in equity already built up, $200,000 minus $150. And all they need is a $10,000 down payment. You assume the mortgage. You take over the tenants and everything. This building we're buying in Section 8, it's paying $2,600 per month, right? And we're about to turn the basement into a unit. We'll collect about $500 or $700 per month. So we've basically just flipped the switch and turned a $10,000 investment into $50,000 in equity plus $2,600 per month coming in minus expenses. So subject to is a no-brainer. You're taking over somebody's existing mortgage. There's no true requirements. I mean, they might send you through a little bit of underwriting, or you can do some sort of assignment on the mortgage. But basically, that's all you're doing. You're taking over somebody's property by taking over the mortgage. So in exchange for the equity they have in the building and all the rights to the property, the tenants and all that, you're basically exchanging it for a down payment. That's it. And you're taking over the loan. And that's it. Usually people that do this are folks that are behind on the mortgage payments. So basically to get them caught up, you give them the cash. They get it caught up to the present day. Always have an attorney reviewing your legal documents and everything. But you can buy the property subject to an existing mortgage. Love the strategy. We're doing this right now. It's a 3-unit building that's in Woodlawn. And we're working on the paperwork to get that deal closed right now. So a lot of these things that I'm saying here, I do the same thing, right? This is all applicable to me. I do traditional financing. I do hard money. I do private money. I do seller financing or seller carryback. I do subject to. And then the next one is a tax sale. The Gary, Indiana tax sale was today. It started off today. Very competitive auction. Unfortunately, we didn't have a lot of success in the auction today. But hey, that just... when one door closes, another door opens. So we're very, very positive when it comes to that. But basically, you can buy somebody's property taxes that they're behind on. And they typically have 6 months to pay you back if you're in Indiana. If they don't pay you back within 6 months, then you can basically file a deed on their property. You can file, so you get a tax lien that's attached to the property. If they don't pay you back within 6 months, you can go to the courts and file a deed. And basically, the courts would deed the property, meaning that you have legal ownership to the property in your name or in your LLC. Always buy properties in an LLC. Don't ever buy it in your personal name if you can. And if they do pay you, they have to pay you back with 10% interest. So it's either you win or you win. Which one do you want? So that's the tax sale. In Indiana right now, they have the auction going on. They have about 3 auctions or so every year. And this year was one of the first times they did it online. It used to be an April auction. Now it's a May auction. Actually, it used to be in March. And then they projected it for April this year. Now it's in May. So today was the first day of the Gary, Indiana tax sale auction. If you need more details, please go out and research or feel free to reach out. You can get properties for as little as $500. That is not too good to be true. I was watching the auction today, and some people were buying properties for as little as $500. So that's the tax sale strategy. Just as a recap on what we went over today. Ways to buy real estate outside of traditional financing. So you can use a hard money lender. You can use a private money lender, seller financing or seller carryback, subject to tax sale. Those are some of the more popular ways. And real quick, Nick asked a question, should you buy the property in your LLC, even if you live there? Well, the bank won't allow you to close in an LLC typically, unless you're doing a private loan or anything. But yes, if you plan to live there and you can close in an LLC, do it. At a minimum, you should have your living trust that's owning the property. All right, that goes on the asset protection side. But you're living, if it's not a property you live in, then a land trust certainly. All right, so if it's an investment property, it's a land trust. If it's a personal property, a living trust. Almost any bank that I know will allow you to somewhat close in a living trust, or you do a quitclaim deed to the living trust. So always consult with your attorney on that one. I am not an attorney. But even if you live in a property, you want to protect it. Don't own anything in your personal name. Trust me. Nowadays, people are predators, right? Everybody's out to get you. I mean, COVID-19, people are getting desperate. Some people are about to be homeless over the next few months. So desperation is in place. So you do want to protect yourself. Never buy something in your personal name unless you have to. And if you do, do a quitclaim deed. A quitclaim deed that allows you to transfer the ownership or the beneficial ownership of the property to another party, such as an LLC or your land trust or living trust. And then the beneficiary of your living trust or land trust, or the land trust would be your LLC, essentially. So with that being said, we're at 8 o'clock on the dot. Hopefully you guys learned something today. Thank you all for tuning in to WJC 98.3 FM, your voice, your music, your station. My name is Chef Badu, and I look forward to continuously delivering you all some content. Thank you.